Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to try and keep it short and sweet, and we're going to be looking at the CFDs on gold, and we're going to be looking at our proxy for the silver market, which is the SLV ETF. Right, you'll have to bear with me, I'm still recovering from the flu. My voice is playing me up quite a lot at the moment, so we're just going to do the best we can. So we'll come out to the daytime frame and have a look at the gold count. So as we've been saying for a long time now, we believe that we're in a primary wave 4 and it's either completed and we're now off into a primary wave 5, I should say, which this pitchfork displays. This is the longer term pitchfork off of our 1-2 pivot. This is our 3-4 here, and now we're moving higher. So if we come into the shorter time frame for the moment and have a quick look at the price action, assuming a completed WXY pattern back in March, we have 5 waves off of the low with an extension in the minor 5 to complete intermediate 1. We then have a pretty clear zigzag into a wave 2 ABC, and now we have a wave 1 and a wave 2 at a minor time frame, which looks like it may well be complete. So really now, if this count has any hope of being right, we should see a thrust up in a 3, okay, to complete minor 3, minor 4, minor 5, okay, into intermediate 3. Alright, that's what we should really start to see a thrust up now, if this count is correct, and then we can get the 4 at intermediate degree, and then the final 5 pushing well off into new highs. Right, but it's slow materializing and coming together, and I have my doubts, okay, just because of the sheer amount of time it's taking to do anything. So if we come down to the 15 minute, I'll talk you through where we are so far. So this is the smaller minor wave 1, 2. We've seen the intermediate 1, 2 and the ABC into the intermediate 2 down here, then 1, 2, 3, 4, 5 into a minor 1, and then another A, B, C zigzag pattern here. Okay, and now we're starting another 5 wave move up and another zigzag pattern here before we finally move up again. So this is minor 2, then this would be minuet waves into minute 1. So let's just correct that. But yeah, it has become quite a tricky count because we've just been going sideways for so long. Okay, so in theory, if this is a completed ABC, we should not be taking out the low here on the 20th September low at 1742. But we are thrusting down as I speak, so perhaps we will. You know, and this is part of a greater move down. So that's the best I've got from a bullish perspective at the moment. So I think it's time we entertain an alternative. Now, we've spoken about in the past the idea of like a W, X, Y, X, Z pattern possibly bringing us to another low, which would take out that March low. But I'm going to present an alternative here. We're just going to get rid of the primary count, and the alternative takes the form of a triangle since we're in a wave 4, and it's a simpler idea that we have a diagonal 5 wave move into an A, then a B, and then we have a 5 wave move into a C here. That was resulted in a truncation, so that needs to be moved along a little bit. We then have an ABC 1, 2, 3, 4, 5 A, B, 1, 2, 3, 4, 5 C for our B. Okay, and then we have a zigzag down here into the C, and we're expecting another zigzag move up into a D to come sooner or later. So up to here, thrust down, then up into a C, and then a final move down into a D, E in another 3 wave move, and then finally completion of a long and drawn out wave 4 and up into a 5. So if this is correct, the low down in August will not break. We will set an E wave before reaching that. We will set a D wave at a lower price than where the B completed in a 3 wave move, and then we will break down in the E, which will be higher than the C, and then we will move up. So that's the way I see the two possible counts at the moment. For the meantime, I'm still siding with the primary count as it is still valid off of the low 1, very deep 2 into a zigzag 1, 2, but if this is correct, we really should start to see a break higher ASAP. Alright, so that's the way I see gold at the moment. And let's go over now and have a look at silver. Now, silver is looking pretty precarious at the moment. Okay, so let's start with the bearish count. Now, the bearish count is the same bearish count I've had for months and months and months. Yeah, it's the same thing we've been looking at. And it's the idea that we completed the primary wave 1, we put in a 3 wave move into an A wave, we put in an expansive B to a new high, and now we're working on 5 waves down in a C, in looking for support in the volume profile, which we mentioned before, around a major fib retracement of the 61.8. I'm just going to move this. There we go, into the golden ratio. With what levels are these? Yes, a gold 61.8% golden ratio and 65 fib retrace. Down here it's 16.64 and 17.21. 5 wave move down, of which we're well into the wave 3 already, with a completion of the 3 to come, then a 4, then a thrust down into a 5 to find support at the golden ratio of what has been an initial 1 A expansive B C swing into a primary 2 before a huge move up in the primary 3, taking silver to new highs. So that's the bearish count. Bearish in the shorter term, bullish in the longer term. Okay, now we've got the bullish count. If I just bring that up. Now this is the idea that we've done a W, X, Y 3 wave move. So we've had a 3 wave move here into the W, a 3 wave move here into the X, and a 3 wave move here into the Y. Now this count concludes with 5 waves down in a C, so that's similar to the bearish count here. I'm not quite sure where that's gone, so let me just put it back in. 1, 2, 3, 4, 5, and that would be our C complete, and from here we should bounce. Now we've come straight back to where this low, and this low in the neighbourhood have been. We've recently touched this level and bounced, but a very weak bounce, not particularly convincing at all. And if we just bring up the volume for a moment and zoom out a little bit, we can see that other than the peak here for our 1 and this random spike here, this was around the time of the Wall Street bets crowd going on about the SLV ETF. We had this spike here. We've had flat to declining volume the whole time. Now we've had a slight increase here, but nothing convincing yet. Nothing convincing of a bounce off of the low. Okay, so they're the two counts from an Elliott wave perspective we've either completed, and we will now get a 5 wave move higher into a 1, pull back into a 2, and then we'll start thrusting up in a 3 of a 3, and price should explode higher if this bullish count is correct. If this bullish count is wrong and the bearish count is correct, then the way I've got it is all of this 5 wave move is into a 3, or not quite complete in a 3 if I recall. Let's just add this into the bullish count. Yeah, a little further to go I make it out to be here. 1, 2, 3, 4, 5 into a 3, into a 4, and then down. So in theory the base support should break, and then there's really nothing in between us and where we're going next. We've got this big gulf in the volume profile here, and that's, we've got a gap here, big gap here. We would fill this quickly, I think, and head down to support around here, which is where we've been aiming with our bearish count for months, where we suspect we might come all the way back to visit. So we either hold here, I think, and get moving up now, and gold will move, silver will move in sympathy with gold, if they're both bullish, or we break this and we really tumble, and that would likely bring the gold count to a conclusion with a new low and help force the silver count into its low to complete the bearish count, and then from there we can look bullishly to new highs to come once we've bottomed. So there the Elliott wave counts. Now let's have a quick look at some basic technical analysis before we wrap up the video. So let's head back over to gold, bring up our exponential moving averages and our momentum indicators here. Come out to the daytime frame. Okay, and we're just going to hide the count since it's cluttering up. Okay, so let's have a look where we are. Below the 10, below the 20, below the 60, below the 250, with the 60 exponential moving average, which is orange, having crossed through the 250. This is what we traditionally call a death cross, although it's more of a case of coiling together than it is any convincing death cross, and I've explained in previous videos that I don't put too much emphasis on that, because we often find temporary lows near death crosses, and we often find temporary tops near golden crosses. Right, so we're in neutral territory in the RSI. It's not particularly convincing. We would like to see some more strength here, some bullish momentum return to the MACD, which we can't see either, still quite bearish, and yeah, not looking particularly convincing at the moment. Let's just have a look if we can get our we can't get a volume reading on the CFD here, unfortunately. Excuse me. So yeah, looking bullish from bearish from a basic technical analysis point of view here, below all the major moving averages. It still counts, as I've discussed, as an impulse with a zigzag into an impulse, so this really has to get moving now, otherwise I think the bears have got advantage here and will likely keep so. Right, now let's come over and see if there's anything more telling in the silver count for the moment. Let's just remove, we'll call this base support. Okay, hide this out of the way, bring up our momentum indicators. Okay, so there's a little bit of positive sign here, something I've noticed straight away, which is, let's just bring up our exponential moving averages. So we've just had the 60 cross over the 250 here, 10, 20, 60 all through the 250 heading lower, price below the 250. So that's just very bearish all round from a basic analysis point of view, but we do seem to have, and I'm not going to call it a low yet, we have a divergence between the previous low here on the 12th of August and current price action, okay, which is giving us a currently higher reading on the RSI. Same also with the MACD. Here we can see a low and a slightly higher low between previous low and current price data. So that's bullish divergence between previous low and current price data. We can't call it a true divergence as we don't have a confirmed low here yet. We may come down and make another low. Okay, but we do have some divergence in the short term to at least be positive about. And as I discussed, we've still got that base support is still holding, but there's very little between us and the floor if this base support breaks, and so we should be looking to see if it holds in the coming week. If it does break, I think we can expect that flush down and the bearish count for silver is going to play out over the next few months until we find a low, a significant low. There is a lot of premium to be shaken out of the silver market. There's an awful lot of people who got caught up in the Wall Street's period of speculation, and there's still huge premiums on silver physically at the moment, which is not being represented here in the ETF at all. So maybe we need to shake off some of that and have a proper breakdown, proper collapse in price. Okay, but if we bounce from here, then we want to see a move back above these moving averages. We want to see a 5-wave move off of the low and a 3-wave pullback. We want to get a count of a 1 and a 2. We want to see bullish conditions continue in the RSI into neutral territory and beyond. We want to see a bullish crossover between the signal and the average here on the MACD, and a return above the zero bound would be nice as well, with some green bars on the histogram. So in the meantime, standing on the edge of a cliff with silver could go either way, feeling pretty precarious, I would argue. A lot of bearish pressure above. Without a doubt, the least move of resistance would be to the downside from here. We're below major moving averages, okay, and we're below major supports and resistance, so we've got the easiest move would be to the downside. But if we do get a bounce through here, we'll be looking for continuation bullish conditions to re-emerge and push us to new highs above all of this noise. Okay, the similar situation to gold. We have a low and a higher low, but we have the same in price. We're still meandering below the zero bound on the MACD. A return to bullish momentum and a pushback above these moving averages would be positive, but for the meantime it is still looking weak. It is still looking bearish. It is not looking particularly convincing at the moment. So we'll wait and see how things develop. I think although the primary count I'm supporting is still bullish, I'm losing confidence in it. In the gold count here, I'm losing confidence in it, and I'm thinking that perhaps that triangle count for the bearish count might be more likely. And from a silver perspective, I'm just keeping an eye on that base support. Does it hold? Does it break? Okay. Alright, and that's the way I see gold and silver at the moment. Thank you for joining me on this technical analysis of the gold and silver markets. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you feel like it, feel free to leave us a comment in the comment section below. As always, thank you very much to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. And if you're not following me on Twitter yet, there's also a link to my Twitter feed there as well. Alright guys, take care, and I'll be back with you soon. All the best. Bye bye.